What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you guys are having a wonderful Tuesday. We had some crazy price action as usual. Look at this range we had today, a lot of back and forth. So today is part 2 of the Fibonacci lessons. And what we're going to be focusing on today is the opposing leg. And we're going to look at PDR if we have time, or we're going to move that to part 3. Okay. So if you're ready, my friends, let's step into the war zone. First and foremost, let's do some shout outs. Caladel, Trading Wars Army, STK, Trading Wars Army, Matthew, Hart, Anthony, Trading Wars Army, Frank, Grumpy Bear, Trading Wars Army, Grumpy Boomer, sorry, Bill, Alicia, Dan, Greg, Gus, Vin, Jay Villa, Calmine, Dex, David. What's going on, brother? So, yep. All right, so exactly. So today we're going to talk about previous day's range. Gary, what's going on? Calmine, Stock Hunt, good to see you. N7 Lead Farmer, what's going on? Does it say lead or lead, brother? It's lead, right? I think it's lead. Sherman, Nandy, Eric, Wed, what's going on, brother? And Keith, good to see you. All right, Ernesto, Steve. All right, guys, so let's go right into this and we will get ready and discuss. So we'll go ahead and hit the replay today. So just like every other day, we need to draw the previous day's high, which is right here. We're going to draw our previous day's low, which is right here. And then we're going to go ahead and get our trigger. And our trigger was long at 377.98. Okay. So it's always important to have your chart prepared for the open so you are ready to go when we open and you have an idea of what to expect. Okay. And actually 10 or 15 minutes, even up to an hour, I generally like, 30 minutes or less to come and look at the price action in the pre-market. Okay. So if you have the price action, the pre-market hours turned on, I think you can do it right here. So pre and post market right here, if you have this clicked, it'll have a line that will show you the pre and post market. Okay. So you can see where we're opening before the market even opens, right? And we can also look at futures. So futures is the continuation of where SPY leaves off. Okay. So if SPY, let's fast forward, if SPY leaves off here on this candle, that's the 1555 candle. If we go to futures, you can see the 1555 candle is right here, okay, right there. And then this is what's been happening overnight. So this is going to go all night long. And then in the morning, you're going to see, okay, this is where we closed right over here. So where are we relative to this? Are we over here? Are we down here? Are we in the middle? So that's a way you could also kind of look at the price action before the open. And I always do that every single day because that gives me an idea of how I want to trade. Okay. So just hit me with a 1 if that makes sense so far. Okay. So the basics before we get into anything, what I do on a regular basis, set the high and low, set the trigger, look at the futures market, look at the pre-market and see where we are. Okay. Are we opening above, below, gapping up, gapping down? That's where we want to basically get an idea of how we need to trade. Okay. So before we go into any of the fibs, what is the first possible trade on any given day? What is it? Well, the first possible trade on any given day is usually an opening range breakout. So I love to go to the first 3-minute bar and to observe this candle. Okay. So you could see on the first 3-minute bar, we opened above the high of yesterday. But after this first 3-minute bar came, it came all the way down to our long entry. Okay. And because of that, I decided that I was not going to take the opening range breakout. I wanted to go for the long trigger instead. And 2 reasons. The first is because this candle is massive. So if I do short here, just for me to get 1 times my money, I'll have to be asking for the chart to come all the way somewhere down here, which is a little bit unreasonable to ask for. So the risk to reward is not the best on very, very big candles. Second of all, the long trigger has been doing pretty good. And this also lines up with the gap fill. So I have a lot of things going for me on this trade. So let's go to the live commentary and I'll show you guys. So you can see right here, Good morning, friends. Gap up. Let's be ready. Leaning towards an orb to start. Long trigger is 380.07. I'll keep an eye for a retest entry. Okay, so you can see 380.07. Did I do a typo there? Let's just make sure what it is. 380.07. Yes, sorry. So I have the wrong one here, guys. So I just gotta fix that. This was the one from the previous day. Okay, so there we go. So your long entry 380.07. Okay. So 2 minutes ago, who's ready? We'll be watching to see if the trigger fails before an orb, so be ready. So I just let everybody know because I could see in the pre-market that we're close to the trigger as well. And then I said, we're very close to the long trigger. I will be using that today. No orb this morning. The candle is very large. Long trigger activated. So we got filled, guys, right within the first 3 minutes. So actually within the first 2 minutes, we got filled on the play. So I did not go for an orb. And thankfully I didn't, because you could see we chopped around for a bit and then we started to squeeze higher. So it was a good call out with the long entry there instead of taking the opening range breakout, because the orb would have been a loser. But I wanted to just give you guys some insights onto when I decide to use the trigger versus the orb. So it really depends on the size of the candle. I will say though today, so if we fast forward here, this long trigger in the morning was exceptional. So you could see our long entry was here and we absolutely crushed it. But for me personally today, guys, I did get out a little bit too early. And I do think I made a little bit of a mistake today. I should have held it a little bit longer, but I know a lot of people in the Discord did follow the actual trigger plan and they kept the initial stop loss. So the initial stop loss for this play was 378.64. So I'll go ahead and put that on the chart so you can see for your reference. 378.64. So this was the original stop. So you could see that it was nowhere even close to being touched. So I feel like I did make a little bit of mistake and I got out a little bit too early, but that's okay. We'll just move on to the next day. Okay, so even I make mistakes sometimes, which is a little bit hard looking back at the chart, but we just got to keep pushing forward. So congratulations to anybody that caught that long entry today with me and that wrote it out. Okay. And now from here, now we're going to get into the Fibonacci lesson of the day, which is the opposing leg. So hit me with the 3 if you're clear. Did that make sense when we were discussing the opening range breakout, as well as the trigger, the interaction, and why I decided to go long instead of going short? Okay. So just hit me with that when you're good. And then we're going to get right into the fibs. And I want to discuss something that is very important today. It's called the opposing leg Fibonacci. So for those of you that have the book, we go right here to page 26, opposing leg. So this is a concept that I learned about a long time ago through trading. And it's something that you need to either be trading it consistently. So you need to look for the opposing legs consistently, or you need to be a scalper to really be able to use this effectively. Okay. So let me show you exactly what happened today. So we'll go back here. Okay. So right here, we could see that we had a clear move to the downside. Okay. So we could see we had a clear move to the downside. So what we're going to do here is we're going to take our Fibonacci from our high to the low. And this is the basic morning leg. Okay. So this is our basic morning leg where we have a push down and then we start to retrace and we're looking to really short 618, 786. Also, if there's at the 50, if we get a confirmation. So what I'm going to do is I'm going to go down to the 1 minute so we can see the price action clearly. So this is the basic strategy of the morning leg Fibonacci. Okay, so the morning we have this push down. So what we're essentially looking for, push down, push back up, and then a continuation in this direction. All right, that's what we're looking for. So let's go ahead and walk through. So we popped up, guys, pretty big push here. We made this little bit of a double bottom here, and then we came right into our fibs. Okay, so this time on the 618, we blew right through it. But on the 786, we started to get a clean rejection, right? So we had a decent push down right here, and I'm going to add the 50 so I could use it as a potential target for you. We came back down to the 50 right there, okay? So for those of you that are scalping the fibs, I always teach you guys, take it from level to level, right? So if we're if we're going from the 786, right? If you're shorting up here, you can start to take profits on the 618, the 50, and continuously down by all the levels. And that's why when I look at the full template, these are all levels for targets, right? So that's why this is designed basically to have pretty efficient and quick targets. And then once you start hitting these targets, you could start to close your position and start moving your stop losses for protection, okay? But here is the other side of the story. So no matter what Fibonacci you have, there will always be an opposing side. There's never one direction from Fibonacci's perspective because there's always two algorithms. One of the algorithms will win, and you don't generally know which one that is, okay? You can use clues on the chart. You can use like candlestick confirmation. You can use different things, but there's always two Fibonacci's that are battling each other. So anytime you have one fib, so you could see here, clearly here, we had this bear fib, right? So put back on the 786. So we got short up here. We had a nice little push down, nothing too crazy though. And then from there, right, we always have to say, okay, well, what is in this area down here? Who's over here? Who's looking to buy over here? Okay, who's looking to buy in this area? Well, this double bottom algorithm down there, okay? So this bullish algorithm is the one that's going to be looking to buy here. So how do we find that Fibonacci level? Well, this is why we call it the opposing. So now we take the Fibonacci from the other side, the low to the high right here, and we're going to go ahead and add on our 50, okay? So you could see right here, this was the bullish algorithm, okay? So the bullish algorithm came on the 50. You could see, and I want you guys to really, really look at this, okay? Because this is very important. So remember, I always tell you, with the 50, I want to see multiple touches, 2 touches. So we had the 50 here, we popped back up and we came down to the 50 again. You can clearly see on this chart, look at these wicks here, okay? Look at these wicks. Can you see the buying that's happening there? Hit me with a 1 if yes. Can you see the buying there? This is how you can take the price action and really try to dig deep and understand what's going on. So over here, we see the algorithm respect the 50 multiple times. We also put in this outside bar confirmation to confirm that if we break above this outside bar, this is very bullish. And then from there, we start to squeeze, okay? So this is what I mean by the opposing leg. The opposing leg is always the opposite. And you can also see we had some holy grails. We had some different candlestick patterns to give us some extra confirmation, right? So I'm going to swap back over to the 5-minute now. And then you can see that this ripped, okay? So, all right, let's get rid of this spot. So guys, this is the concept of the opposing leg. And I take opposing legs not all the time based on the price action, but you see the little bit of an issue with the opposing leg is you have to do something with the morning leg. So for example, with this morning leg short, if you didn't cover on some of it on the way down, then how do you get into the opposing leg? Well, there's 2 ways. The first way is use a different instrument. So for example, you can short on futures and go long on calls, or you could go long on futures and short on calls. And then you also have shares. Okay. So in this book right here, the S&P 500 options mastery book, these are the tools that I use. So stocks and shares, future contracts, and options. So technically you could be long and short at the same time on SPY. Okay. You can't do it with the same instrument, right? Because you're going to have to close one. You're going to have to close it and then enter. And then you have to realize a gain or loss. But if you use multiple instruments, this is the way you can do it, okay? So the opposing leg is an advanced Fibonacci leg. It's an advanced leg. It's always going against the trend at the time, okay? Against the quick morning trend. And it's a very powerful tool, but I recommend for those of you that are doing the opposing, I'm going to show you another one a little bit later in the day, is you got to stick with it. Because it's one of those Fibonacci that's a home run Fibonacci. Like when it works, it absolutely destroys. And the reason is because it's going against the trend. And when it goes against the trend, if you change the trend, if you're able to change the trend at the peak, you're going to get either the top or the bottom of the peak. And that's how you make the most money. I'm going to show you another example as we continue on. Okay. So after that, opposing leg, we started to squeeze higher, okay? And what I want you guys to remember is as we squeeze higher here, we're going to start to look for opposing legs, okay? So let's continue this discussion on the opposing leg. So obviously everything right now is bullish. So what the opposing leg is trying to do is every time you have a peak, okay, and especially around lunchtime. Lunchtime is when you can see a lot of reversals, right? So we're going into 11 to 1 o'clock. So you take your Fibonacci from your high to your low like this, okay? And what you're doing here is you're using this as a gauge to find where the potential peak or the high of the day is. And this is through using the opposing leg. So you could see this opposing leg, we came down, we tagged the 618 right here, and then we pushed lower. So this was a nice winner right there, okay? But we're doing counter trend trading here, all right? And then you can see later on, we come back up to the 786 of this leg, and we shut down as well. Or you could just move that anchor a little bit lower to there, and then this was actually the high of the day. So let me fast forward it right there. Right there. See that, guys? So the opposing leg, what you're really doing is you're going for a home run. Okay. You're going for a big play. And this is how you do it. So from a short perspective, you're looking for the top. But the good thing about this is you're not just taking every candle and saying, I'm shorting, I'm shorting, I'm shorting. You're actually waiting for a Fibonacci play. So you need to see a push down first. Then you do your higher low, and then you're not going to chase it on the lows. You're going to wait for that pullback into your golden zone, and then you're going to take that down. All right. And there was a lot of nice confirmations here. There was an inside bar over here. There was an outside bar over here. There was another little doji here. There was a lot of confirmation of slowing down here. As long as you kept that stop loss at the swing high, you would have been good to go. All right. So hit me with a 9 if that makes sense. So that is the opposing leg. And for those of you that are interested in the opposing leg, you know, like I said, I take them from time to time, depending on what the price action looks like. But you really need to stick with it, guys, because it is one of those trades that if you hit it one time, it can pay for months. It could be like the $10,000, $20,000 trade. So you could even see right here, if we just analyze this quickly, let's go to futures and let's look at the points. So your short was right around here. To the low of the day, guys, that was about 71 points. So on one contract, that's roughly 3,500, right? So we have this brother right here. Caladel right here, Trading Wars Army. I caught that 786. Awesome job, brother. Yep. So there's a lot of traders in the Discord that are looking for opposing legs, but it's not where you start, okay? Because if you don't understand the first leg, you're never going to understand the opposing leg. Okay, guys? All right. So that's what I really wanted to talk about. That was the concept I really wanted to talk about today, was the opposing leg Fibonacci. As I said, we had a nice winner with the long trigger in the morning. I misplayed in terms of I got out a little bit too early. If I had waited 10 more minutes, I would have made a lot more money. So kicking myself a little bit on that. And then we had some really nice opposing legs. And then after that, guys, we had, this election day, crap, and the market just started doing random things. So, that's why I like to really focus on the morning. There were some opportunities here to play later in the day. So for example, we had this big push. If I go to futures, you can see this was the push down. And if I come from high to low here, we actually tagged the 786 during regular trading hours. And then after hours, we sold off for a little bit. And now if I go ahead and swap the fibs, so you can also use the fibs when you're trading after hours from low to high right here. You can see we just came to this 50 and we've been holding this 50 and pushing higher. So we're in between two fibs right now, which is a really, really nice setup. Both sides were able to make some money. So that's good price action when both sides are able to make some money. All right, guys. So the next thing I want to do is I want to look at MU, which was a day trade today. MU was a really good trade. Really, really nice. So I'm going to talk about MU to show you guys a little bit on stock trading. It's not necessarily Fibonacci, but it is in a way because the triggers that I use are based on fibs and average true range. Okay. Hit me with the 2. Are you guys interested in the MU play? So MU is a stock that I've been trading for years. It's one of those stocks that's so volatile. From a day trading perspective, you can make a lot of money and the fills are really good. Okay. So let's go ahead and we'll do MU. Okay, so we start off with the daily chart. So why did we want to trade MU? Well, if you look at MU in October, it was a real chop fest, right? Back and forth, back and forth, back and forth, back and forth. Right here, we had some crazy price action. I don't think I've ever seen this before. And then we came to Monday where we had a simple inside bar, very similar to this, which was near the top of this range. So we're expecting at MU for there to be an increase in volatility with this inside bar. Even if you look at these inside bars in the past, after these inside bars, there tend to be a volatile day. And as day traders, that's all we care about, right? We want volatile days. Volatile days, it's what's going to pay us. So let's go over here to Twitter. So I posted MU last night. So please make sure you guys are following the Twitter because I always post free picks every night. So MU, we were looking long at 56.68. All right, so here we go. Let's go ahead down to the 5-minute chart and let's draw our big box and our small box. So this is also the big box, small box strategy. Here's your big box from Friday. Right here. Okay, and within that box, we had a smaller box right here. So what does this show? So this is the big box, small box. What this shows is the price action is getting tighter and it's consolidating. So at some point, this range needs to break. The range will not stay tight forever, okay? It could stay for a while, but generally with stocks, you will see a breakout at some point, either to the upside or the downside. It doesn't matter. We'll be ready to play both, okay? So our long trigger, 56.68 right there. So go ahead and put this in green. And let's hop into the Discord and let me find the stop loss. So MU, is it the right day? Yeah, here it is. So the MU stop loss was 56.30, 56.68, 56.30. Okay, so we'll go ahead here, copy, paste, 56.30 right there, put that in red. All right, so now we have our chart ready to go. So we're here on the 5. First candle, we gap up. So people always ask me, Rich, what do we do? In this situation, for me, I keep the order open and you'll see why. Okay, so here's my order. It's waiting here. The price must touch this level before I enter the trade. So that's what we use stop limit orders, okay? So here we go. We go sideways for a while. And then finally, later in the day, this is around 2 o'clock, we start to come down. And finally, we touch our entry right here at 220. So we did take a little bit of heat on this trade, guys, but it popped right up after this little bit of heat and pushed right into the close. So that, my friends, is how you do a retest trigger trade, okay? So always have that stop loss for protection. But this was really nice because we came pretty close to catching the low of the day. So the options definitely went for 35% plus on this. And with shares, really good money as well. Over $1 per share in gains. So pretty good. And this is how you can automate your trades and just set them and forget them. So literally we had this in the broker. It executed itself at 220, guys, 230 here. And we just let it do its thing, right? Either it's going to hit the stop loss or it's going to go into the close. And that's what we're looking for as day traders. We have a system. We don't deal with it. We don't care. We don't adjust anything. We let the trade play out according to the plan. All right. Hit me with a 9 if that makes sense. So I really like the big box, small box strategy for automation. Really nice strategy. Very simple. One entry. Okay. Either it hits the stop loss or hits a target. A lot of people, when you're trying to become a better trader, you're trying to build the right habits. This is an easy way to build good habits. You have to accept the losers when they come and just be disciplined and follow the plan. Okay. So you're kind of challenging yourself not to touch the trade, just to let it do its thing. And that's a good habit to build. Over time, you need to be able to do that because sometimes we self-sabotage ourselves when it comes to trading. We have good trades, we're good traders, but we do dumb things. All right. Okay, so what I'm going to do right now is I'm going to go over to the scans. Let's see if we have anything hot for tomorrow. So I'm here with the blue raindrop setup. So we had Amazon as one of the hot ones yesterday. Let's see what else we have. So from a blue raindrop perspective, none of these names I really like to trade. So we're going to move on from there. Let's go to the Holy Grail and see if there's anything. So nothing that I like here. And then let's go to the Nirvana. So this one right here. All right, so Cisco, this is a decent day trader. So you can see right here, the Nirvana we had back on the 27th of September led to a little bit of chop, but maybe this time might be a little bit better. Monster, this is pretty nice off of earnings, right? So this is a nice little setup here for Monster, anyone that plays those names. Yep, so those are the two that I'll be focusing on tomorrow, Monster, Cisco, okay? So as always, guys, if you want to get my scans and my layout for Trendspider, use code TWZ30 at checkout, 30% off, or let them know you want to join the Trading Wars affiliate if you're already a member, and they'll send you everything for free. All right. As always, guys, check me out at tradingwars.com. That's the place to be. If you get any one of my 3 books, you get 1 month for free, 30 days. Come trade with us live in the Discord tomorrow. You get my indicators for life. The S&P 500 book is one of my top sellers. We talk about options in here a lot, guys, and different things, everything about the S&P 500 that you need to know that we use from a day trading perspective. Otherwise than that, I want to thank you very much for your time. And let me know, guys, if you are enjoying this Fibonacci series. I'm trying to do a little bit of a like every day, like a different topic. Please let me know in the comments. Hit the like, subscribe button, because someone could easily charge you a lot of money for this course. And I'm just going to give it to you guys for free. Okay. So just go ahead and just let me know how's it going. And if you guys like it, and we'll continue to do it. If not, that's fine. We can just go back to what we were doing before. So please let me know. Thank you very much for your time. And I will see you again tomorrow. Take care.